Okay, we'll continue to study and track developments on that front, but let's move on to good developments on a particular company. That's Genpact, India's largest outsourcing firm, which came in and beat estimates on multiple fronts. Profit was up 6.7%. The outlook seems positive right now. Let me get in quickly the management on those details. Tiger Thiagarajan is the president and CEO at Genpact. Tiger, good to have you as always, and congratulations on a good set of numbers. So let's first start with what went right in this particular quarter.
Thank you, Namrata. A lot of things seem to have gone right. We had a great first quarter. First of all, I'll start with the acquisition that we did last year of Headstrong, which now has become our capital markets vertical, and that drove revenues, to the 30% mark because we didn't have it last year. The second is, the whole smart decision services area, which is analytics and all the work that we do around building insights from data. And given the amount of data that people have and the fact that they want to build insights, that grew by 60% plus. And of course, our big engine of growth, as usual, global clients, business process management. The world is uncertain. It's volatile. I think companies want to drive change, and they want to drive their business in a very different way and want to drive better outcomes. So, and the last thing I would say is our IT business growing at mid-teens. Hasn't happened in many years, so we feel good about the first quarter.
But Tiger, exactly, there's so many voices of concern in the IT sector about the global growth slowdown. How are you managing to ink in, and I believe these are long-term contracts, vis-a-vis the environment? Clearly, Eurozone and US to some extent seeing that softness.
So we've had actually a great run in Europe. We've grown our European business substantially over the last couple of years. And if I look at the first quarter numbers, again, Europe is one of our leading growth engines from a geography perspective. Of course, Asia and Asia Pacific, even stronger growth than Europe, led by China, Japan, Australia. I would say part of our value proposition is really driving change when businesses have to drive change. Business process management, which is a lot of what we do, and analytics is very non-discretionary. You have to do it. You just can't switch it off. So while I understand some of the concerns that other people have raised, and it's true, the world is uncertain and volatile, for our business, it seems to be pretty steady going.
Okay, what about the Accounting Plaza acquisition and how you see it integrating into your full-year outlook now?
So we guided the street earlier at the beginning of the year to $1.84 to $1.88 billion of revenue. We are sticking to that guidance, and then Accounting Plaza is on top of it, and that is about $24 million and plus for the year. So our guidance for the year now becomes $1.86 to $1.9 billion. We love the Accounting Plaza acquisition. It gets us into retail in a big way. It's one of the largest retailers in the world. We now serve them in finance, in HR, in technology, and we get a European footprint to beef up our existing European footprint, which is great, but we get a center in the Netherlands serving Dutch language skills. We get Poland, we get Czech Republic. I think we like what we've done with the Accounting Plaza acquisition, and that becomes part of our European delivery footprint. It becomes part of our retail vertical.
And what about the currency factor, Tiger, with especially the rupee factor and the way that it's going 52 and higher? How would you account for that?
The interesting thing about us, Namrata, is that we don't really think about currency every day. If you go back to our history, we were part of a large corporation that actually would hedge out everything in terms of costs into the future. So we followed that policy as we became an independent company. We hedge our costs in big cost centers like India and China and so on well into the future. So what that does is it allows us to focus on our business, focus on clients, focus on driving value to them, and not worry about foreign exchange rates every day.
No, but this is a dramatic movement, Tiger. It doesn't make you shaky in the least bit, the rupee move?
No, it doesn't. It's amazing. It doesn't, because we hedge out into the future. So therefore, our costs today, and we are a dollar-denominated company, our costs today are hedged out, and they were hedged out a long time back. So, for us, the rupee movement today doesn't really impact us. I mean, they impact us on the margin, but in general, they don't impact us broadly in the business.
Okay, good for you there. But Tiger, one final question in terms of new client acquisition and where you're seeing maximum add-ins coming in. What kind of sectors, verticals that you're seeing maximum client addition in?
So I'll start by saying that actually we see very broad growth across a range of verticals that we are focused on, but I'll pick out a few of them. Consumer products, CPG as an industry is, I think, undergoing radical transformation given the slow growth in the world. Also given the fact that we are so focused on analytics as a service as well, apart from broader finance and accounting, procurement, and so on. Another that I would pick is life sciences and pharmaceuticals as an industry. Again, radical transformation happening in that industry for obvious reasons. Healthcare, we see great traction in healthcare. And of course, banking, and financial services. Insurance, we see some really great traction in insurance. We signed a very significant different type of insurance deal where we're going to do everything from middle office to back office to finance to procurement to analytics for one of the larger insurance companies, and everything else on the front end will be done by the insurance company. And of course, capital markets, which is interesting because capital markets is undergoing radical transformation. I think discretionary spends in capital markets are under a close watch. But at the same time, all capital markets companies are trying to think about transforming themselves. And we are, I think, extremely well positioned when we work with clients to transform the way they run themselves, whether it's process or it's analytics combined with technology. So it's very broad. And from a geography perspective, I would say Asia Pacific stands out. That includes China, that includes India, some great deals in India, very innovative deals. And Europe, of course, I already talked about Europe. But the interesting thing about the US is that it's on a steady growth. So our pipeline across the board is very steady,
right,
and we feel good about it.
Right. All right, Tiger, thanks so much indeed. And congratulations once again on a great quarter. You've managed to beat the odds in an otherwise quite a difficult scenario for IT companies worldwide.
Thank you.
And we've completely run out of time here on Nasdaq Live as well. See you back tomorrow. Remember, we've got the big ECB meeting, which is going to be top focus. Thanks for watching.